Let's talk about a price that you never, ever see on a price tag, but it affects almost everything you buy. Seriously, when you fill up your car, it's there. When you buy groceries, it's baked into the shipping costs. That plane ticket? Yeah, its price is almost completely dictated by this one invisible number. We're talking about the price of a single barrel of oil.
And you know what's crazy? No one actually knows what that price is supposed to be. For real. Ask any expert for a fair price, and you'll get 10 different answers. Is it $50? 80? 130? The market has absolutely no idea, and because of that, its volatility is just staggering.
I mean, just look at 2008. It skyrocketed to an all-time high of $147, right as the world was tipping into a massive financial crisis. Economies were just shuddering under that cost.
But then, in April 2020, something happened that sounds like it's straight out of science fiction. The price went negative, as in minus $37 a barrel. Can you imagine pulling into a gas station and they pay you to fill up your tank? It sounds totally absurd, but that's pretty much what happened. So how on earth did this black liquid from under the ground become so powerful and so chaotic?
To really get this, we've got to rewind the clock about 150 years, back to a time when oil wasn't for cars, but for something way, way simpler.
See, in the beginning, oil wasn't for driving. It was just a cheap replacement for whale oil in lamps. But then, the automobile changed absolutely everything. For decades after World War II, a few powerful Western companies called the Seven Sisters basically ran the show, and they kept prices stable and low. But the nations that actually had the oil, well, they wanted control. So in 1960, they formed OPEC, and in 1973, they flexed their muscle. An embargo quadrupled prices almost overnight, and it proved to the world that oil wasn't just a commodity, it was a weapon.
That crisis changed the whole game. The price was no longer stable, and a new, much more complicated dynamic began. And if you think the price today is just simple supply and demand, you are missing the biggest part of the story. It's really a global game with 4 key players at the table. First up, you have the traditional market maker, OPEC+. It's a coalition of 23 countries that controls about 40% of the world's oil. When their ministers meet, believe me, the entire financial world holds its breath. A single decision to cut production can send prices soaring in a matter of minutes.
But a new player completely changed the rules: American shale oil. See, unlike traditional drilling, shale wells can be fired up and shut down pretty quickly. This creates what they call a shale ceiling. If prices start getting too high, say over $70 or $80, American drillers can quickly ramp up production, flood the market with new supply, and pull that price right back down. It's like a built-in release valve.
Our third player is the engine of demand, China. As the world's #1 oil importer, the health of its economy is, well, everything. When China releases strong economic data, traders see factories humming and more cars on the road, so they buy oil, pushing the price up. Weak data does the exact opposite. You could say China's economic pulse is the oil market's heartbeat.
And finally, we have the wild card, financial speculators. We're talking banks, hedge funds, and traders who buy and sell oil futures on a screen without ever seeing or touching a physical barrel. For them, oil is just a number. They trade on weather reports, geopolitical rumors, economic data, and pure raw sentiment. And this is where sentiment becomes king. In 2018, a single tweet from the US president complaining about OPEC caused the price of oil to drop by almost $2 in a single day. Just think about that for a second. One tweet moved a market worth billions. It's proof that sometimes psychology is way more powerful than geology.
Which brings us right back to that completely paradoxical moment in oil's history, the day it became less than worthless. Let's go back to April 20th, 2020. A perfect storm was brewing. First, pandemic lockdowns made global demand just evaporate by nearly a third. At the exact same time, OPEC Plus talks fell apart, and Saudi Arabia opened the taps in a full-blown price war. The world was literally drowning in oil. Every tanker, every storage tank, every pipeline was filled to the absolute brim. There was simply nowhere left to put it.
Okay, so this is where the financial world collides head-on with the physical one. It all came down to this thing called a futures contract. It's basically a deal to buy oil at a set price on a future date. Now, normally, traders just sell the contract to someone else before it expires. But on this one day with the clock ticking down, there were no buyers. Nobody wanted it. And anyone left holding that contract would be legally forced to take delivery of thousands of barrels of actual physical oil. With literally nowhere to store it, they got desperate. They were willing to pay anyone, even $37 a barrel, just to take the oil off their hands.
This extreme volatility has massive, massive real-world consequences. For nations whose entire economies are built on oil, this price isn't just a number on a screen. It's their destiny. And that destiny can go in one of two very, very different directions.
So consider two different paths. On one side, you have a country like the United Arab Emirates. They made a truly brilliant decision. They decided to treat their oil not as a permanent business, but as startup capital. They created these huge sovereign wealth funds and invested that capital all over the world. The result? Today, over 3/4 of their economy is no longer dependent on oil at all. But on the other side, you have the resource curse. Nations like Venezuela and Nigeria relied completely on oil revenue. When prices were high, life was good. But when prices crashed, their economies just collapsed, leading to hyperinflation and poverty, all while sitting on top of unimaginable wealth. This whole phenomenon actually has a name: Dutch disease. It was first noticed in the Netherlands after they discovered huge natural gas fields. The flood of money from gas made their currency so strong that it priced all of their other exports, like shipbuilding, out of the global market. Their other industries just withered away. It's a brutal paradox. Getting rich from one thing can actually make you poor in everything else.
So what about the future? I mean, we hear it constantly, right? The age of oil is ending. Electric cars are taking over. Solar panels are everywhere. It seems pretty logical that oil is on its way to becoming a museum piece. But the reality is way more complicated.
We tend to think the EV revolution is going to solve everything. And don't get me wrong, it's a huge deal. But passenger cars only account for about 1/4 of all the oil we use. So what about the other 75%?
Well, here's the challenge. For long-haul flights and those massive cargo ships, there is currently no viable electric alternative. The energy in jet fuel is just way, way more concentrated than in the best batteries we have. Then you have petrochemicals, the plastics, medicines, and fertilizers that are the basic building blocks of modern life. And finally, billions of people in developing nations are going to keep relying on the most affordable energy they can get to grow their economies.
And look, this isn't just speculation. The International Energy Agency projects that even in a very optimistic, very green scenario, the world will still be using around 75 to 80 million barrels of oil per day in 2030. Now, that's a decline from today for sure, but it is still an enormous number. Oil isn't just disappearing. Its role is changing.
Ultimately, oil has become so much more than just a fuel. It's like a mirror, reflecting our global politics, our technological shifts, and all of our collective economic anxieties. So the real question isn't if oil will one day become obsolete. The question is, as its role transforms, how is it going to reshape the world that we all live in?